What's going on, everyone, and welcome to aXpire's podcast. I'm here with Matt Dibb, founder and CIO of Astronaut Capital. Matt, it's great to have you.
Thanks very much for having me. Pleasure to be on.
Yeah, of course. So just to kick things off, I think it'd be helpful for you to share a little bit more about your background with the listeners. So that's where you came from, what got you interested in tokenomics and crypto research, and then we can dive into some of the more detailed topics.
Sure thing. So in a past life, I come from more of a investment banking background. I initially started in Australia, Sydney, within Macquarie Bank, and moved over from typical finance into more M&A, and from there into equities and derivatives, broking and trading, as well as structured products. So my background is, historically more so in trading and analysis. That sort of work led me to looking at and specializing into small cap IPOs, which, as you can imagine, things that, companies that are seeking to be listed on public markets that, might have a market cap of anywhere between $5 and $50 million.
Right.
I was doing that for quite a few years. I initially stumbled across Bitcoin early in 2012 and started buying it in 2000 and around that time, around 2012, 2013. From there, I didn't think too much of it. Obviously dealing with more traditional markets that were very liquid, weren't didn't possess the same type of volatility that cryptocurrency had. It didn't really hit me until probably about 2016, where we saw the rise of Ethereum and ICOs come out. And that's where it really caught my interest as a means of funding more than anything, more than the whole payment side of things and blockchain technology. Seeing some of these companies come out and utilizing blockchain, but also as a funding mechanism, I found it quite interesting. And so we would all of a sudden start seeing some of these companies, or projects come out of the woodworks, and to my surprise, raising millions and millions of dollars. And I thought, wow, this is interesting. At that time, venture capital, people were trying to raise, if you could raise $1 or $2 million, or even say $500,000 for a seed-based startup, then you were throwing parties and it was the best days of your life. But for somebody to come out with a white paper and raise a few million, I thought, what the hell is this thing? So that sort of caught my interest, and from there I sort of got into the research space, and that's how my first company, Picolo Research, started.
Very interesting. So my understanding is that Picolo Research is a partner of Astronaut Capital. Is that accurate, or how would you really describe that in your words?
Yeah, sure. So, I mean, Picolo Research, we initially started it, actually it was just a private company, that, I started with several other partners, and we were exclusively doing research for a family office in Hong Kong, who was interested in finding out more about the cryptocurrency market. And so our mandate was initially to sort of look across a number of projects and find out, is it actually possible to value them? And if it's not possible to value them, then how is it that we decide what to buy? And we sort of scratched our head around that whole concept for quite some time, before we came up with a framework. And long story short, with Picolo Research, we in 2017, so about 6 months later, we sort of made it public, and we started distributing our independent analysis across for free to the general market. And so we came in quite early at that stage in terms of analyzing initial coin offerings. And at that point in time, that's when we acquired the company, and then we created Astronaut Capital. And Astronaut Capital is a fund manager that specializes in cryptocurrencies investments, and as well as initial coin offerings and some equity investments as well.
Very interesting. I also come from a traditional finance background prior to entering the cryptocurrency and blockchain market on a full-time basis. So I can see the benefit providing a means to evaluate the intrinsic value of crypto assets. I think it's quite common in this space to hear the question from people who are either not familiar with cryptocurrencies or not that versed in finance: what is the underpinning value of cryptocurrencies, such as Bitcoin or other crypto assets? And I think the way you approach it in your traditional way, previously unseen in the blockchain market, and that's kind of a combination of different methods, such as your equivalent of the DCF, and then taking the average, makes a lot of sense. I think having some standardized valuation approach will drive institutional interest in this space because, in theory, other than the mining costs, which could be used as a valuation method, and market share of potential areas where Bitcoin and other cryptocurrencies could take a hold, we have not really had a standard way, as we do in traditional finance, to find the intrinsic value of individual crypto assets until today with your research. So we can see why family offices and other institutional investors would be interested. So there's a marketing aspect to it, but why was it such a focus for Astronaut in particular? What made this really stand out for you guys and use it as a way to differentiate yourself? So maybe you could provide some color on that would be very helpful, just to give the listeners some insight, you know? Does it give you an edge? Or why was there such a focus?
Yeah.
You did touch on it a little bit, but maybe some more color.
Curious.
Sure. I mean, yeah, from our point of view, I think at that point in time, in 2017 in particular, you know, the funds were a dime a dozen, so they were popping up everywhere. And what we noticed is that most funds that were being created were effectively created by guys that had already made some money in, you know, Bitcoin earlier on in the years, and effectively we're just spreading capital into, you know, whatever most retail people would FOMO into. And so, you know, what we wanted to do was take a bit more of a professional and traditional approach to this. We wanted to be what we call research integrated. So having an independent arm that effectively does research, and then having the fund manager being able to make decisions based on that independent research. And, you know, that's what happens in traditional banking and investment firms, whether it's family offices or private equity firms. And, you know, that's how you can make rational decisions and you know, actions on investment. So, you know, we wanted to differentiate ourselves by doing that. And, you know, we've found that approach, it gives us sort of the ability to look at the market very differently, look at projects that are out there very, very differently. And, you know, over the years, we've seen the market evolve a lot and continuously. And, you know, that also means that we have to change our methods of analysis. We have to change the models that we're using to you know, evaluate different projects as well.
So that's a great point to lead into a follow-up question. So how have your valuation methods changed over time? And what's it saying?
Sure. I mean, first things first, I mean, I would say that there is no perfect science for valuation with cryptocurrencies. And I would say it's primarily because crypto right now is not really an efficient market due to, you know, liquidity and the way in which things are issued. For example, we'll take market capitalizations. Market capitalizations don't really mean anything. You know, you can do an ICO tomorrow, and you can airdrop, you know, 2 billion coins, and you can raise money for one coin for $1. Now that's going to put your market cap at plus 2 billion.
Right.
So, you know, having depending on what circulating supply is dictates, or total supply dictates the market cap. Now, if you were an IPO, you couldn't do that. You know, you have to have a certain amount of float out there. There's requirements, and for cryptocurrency, there's not. So, you know, in terms of valuations, I wouldn't say that they're flawed in any way, but I think they're much harder. So you need to look outside of, I suppose, the traditional aspects of valuation. You couldn't apply just a normal valuation that you would to a listed company.
Right.
Instead, we need to take a more holistic approach and sort of think outside of the box. So, by doing that, effectively, what we are looking at different things, and as I said, the market goes through cycles, and I would call a market as quite thematic, actually. So, in 2017, it was all about decentralized applications. And then 2018, it started being about protocols. And then, as we get to 2019, the focus is on exchanges and, buyback tokens and burn tokens, etc. So, we identify that those particular themes also have a very large impact on the prices of certain projects and basically break them up into segments. And so that's just one example of something that that can dictate what future valuation can be, where we are in the market cycle, and how the market is appreciating or valuing coins themselves, whether they're putting some in higher regard than others, due to the mechanics or the utility of the token.
Right. That's an interesting point. So say something was in an earlier theme. So say dapps, which, as you pointed out, was a 2017 theme. In that situation, for a project that was today, 2019, say, out of favor with the most recent trend, which could be exchanges, as you point out, for this year, do you see a way for these projects to still have a valuable token? And if so, what do you look out for in those types of tokens? And what are also some red flags? So how do these altcoins survive? Assuming they will, which I think both of us believe they will, but it takes a special type of coin. So what is that?
Yeah, look, it's a good question. I think a lot of the time, we believe the market can be quite cyclical, although the market hasn't really been around long enough to prove that thesis right. But effectively, we believe that for example, decentralized applications probably will be hot again at one point in time, and it will take one blockbuster great dapp to lift the valuation of all of the rest. And you can see that now. You look at BNB, Binance token, that has effectively lifted the valuation of all other exchange coins, whether it's Qcoin or OKX, now Leo by Bitfinex. So we're seeing that we firmly believe that it'll take in each of these different segments of the market, whether it's dapps or anything else, that eventually once one gains a bit of traction, one specific project, then that's what everybody's going to be focusing on. Now the same thing happened with protocols. If you look at Icon, for example, once off the back of Icon's success, ICX, we then saw a raft of protocols come in. So I think it's a matter of time until we sort of see that happen once again, and probably go full circle all the way back to dapps. Now, the second question you had is red flags. What sort of things are red flags? And I think there's a couple of things there in our analysis. Obviously, in tokenomics, there's some big ones with regards to how much of the supply is actually going to be out there in the market, how much is the team keeping, what type of vesting periods are there for the team, is it a snatch and grab, are they simply trying to keep all the tokens for themselves? I think a really big one that we used to see quite a lot back in the day was an ICO would raise, for example, and their soft cap would be $2 million, but their hard cap would be 50. Now, that implies that they need $2 million to get the project done, but they'll take 50 million if they can get it.
Right.
That doesn't really make a lot of sense, when you start to think about it. And so, for any project, most projects don't need more than a couple million, if that. Some of them probably only need a couple $100,000 to get going. And so, we see those sorts of things where we can identify a project as simply just a money grab, as obviously a big red flag. Outside of that, the red flags are generally to do with the team, and their past history. So always looking into due diligence of each of the decision makers is very important. And outside of that, it's the project. How commercially viable is the project itself? If you can't, well, I mean, it goes back to the question that many people have brought up in the past. Does this project actually need blockchain? Should it be a token? And a lot of the time, the answer is simply no. But I think over the last year or two, we have seen a lot of different projects really try to push tokenization into existing sort of ecosystems and into existing tech, which probably isn't ready for it either. That's one of the other things that we really look at when it comes to identifying any red flags in a particular deal.
Super interesting, specifically that whole field of tokenomics and looking for what's going to drive value. So avoiding those cash grab situations with the low soft cap and high hard cap situations that you pointed out. We find it particularly interesting to look at some of the superior altcoins, so aXpire, BNB, BAT, whereby the company's delivering a product, whether that's a dApp, a protocol, an exchange, whatever it is. But the most important aspect of the delivery of this product is that it's a massive value add, and there's a token there that doesn't get in the way at all. In fact, the token can add value, whether that's Binance's DEX, aXpire's Matchbox, the Brave browser. You don't really need to understand the token for each product. And as previously stated, it adds value versus the other way around. With that said, for BAT, aXpire, and BNB, we know that the tokenomics are different. They each have different products. But with all that baked in, do you see a checklist for tokenomics as it relates to a token being high quality? Or is it really a case-by-case evaluation in your view? How do you think about things in that world? Must-haves or very much unique to each coin?
Well, I mean, firstly, I mean, if you look at the perfect example of a utility of a particular token, as people have always said, if you can get a utility of a token to a point where people don't even realize that they're using blockchain or they're using cryptocurrency, then that is going to be, the ultimate penetration level. For example, if you've got messaging apps and live stream apps that are already using types of virtual currencies that are already centralized and they've created, and you can buy them through the App Store. Now, that sort of stuff can certainly be used as cryptocurrency if they wanted to integrate that. Same with gaming. Obviously, a lot of people got into cryptocurrency originally by buying and trading skins for several games. So I think the applications there are absolutely endless, and it needs to be frictionless. Unfortunately, with most of the decentralized apps that we've seen and token applications that we've seen, the user experience has been pretty terrible, I've got to say. It should be a lot better, and that's where the focus really needs to come from. And I think it's only a matter of time before somebody does it right. And BAT, as you mentioned, I mean, they copped a lot of heat last year because probably early last year because, there wasn't a lot of use for their token. But now, when you look at what they've implemented, they're probably got one of the better chances out of the whole ecosystem of really being successful. Right. I think what they've got is quite great if they're able to execute it at scale. I think it's really cool. You then move over to the exchanges, BNB, etc. And Binance BNB resembles many aspects of what would be called a security token. But it does share, it does have some utility to it outside of that. So, utility being, lowering trading fees and staking for lottery to get into IEOs. But then you've got this very interesting concept called, the buy and burn, so buying back basically the revenue that's made on the platform. That is effectively a dividend, if you like, or it's burning the supply to increase the value based on profits of the company. So they're really interesting models that we've seen, and that's obviously a very hot model right now, which a lot of other exchanges and wallets, etc., are also trying to implement. And it does make a lot of sense. It's probably one type of utility, and I use that word very loosely, utility, but it's one type of utility that you actually can put a valuation on, because
Right.
you are able to see forecasts of what their revenue is and how much they're going to burn, and that's the basis of financial analysis effectively.
Right. So I looked at your models and they look kind of similar to a DCF, which is easy for someone from the traditional finance world to digest and understand. So hats off for being at the first firm or the first group at really applying this old world quote unquote valuation to blockchain in a constructive way. I'd also tip my hat on your report regarding Bitfinex's Leo token. Regardless of your view of their legal situation, on the tokenomics side, I think they've done a great job of laying out how they add value, or how they add utility rather, to their token in an easy to understand page, which you can find at leo.bitfinex.com, where they've had their schema laid out of buying their tokens in the market in real time, burning them, and then the cumulative impact that's had on their project. I think we're looking at doing something similar in our project. This has been really interesting, Matt. Just to wrap it up, would love to know what you're really bullish on right now in the market cycles. So dapps, IEOs, protocols, etc. What does that look like for 2020? And then perhaps a final fun question. What is the best tokenomics you've seen in a token so far? Maybe not the only great one, but one of your favorites. And then finally, would love to give the users a way to get in touch with you if that's what you'd like, and have a way for them to follow up with you, because I think what you're doing is really fascinating and people want to know more.
Sure. So firstly, right now, where are we at? What are we looking at right now? Obviously, exchange tokens are a big thing, and it takes exchanges that already have distribution and adoption and users. So looking at even some of the outliers that probably there hasn't been a lot of focus on, like OKX, for example.
Right.
They're the types of things that we're looking at right now, because it is a theme, and it is, as I said before, something that can be valued. And if they're if they are increasing utility for their token, which a lot of them are trying to do, then that's also good. So that's a real focus for us at the moment. What else are we looking at? We're beginning to look at, although very, very slowly, and I think we're way too early, the whole security token market.
Yeah.
Obviously there's a lot of regulation around that, and that's actually I suppose it's not. I'm not saying it's hurting the industry. It's holding back the industry. It is making it a lot slower. I think people's expectations were that the STO market was going to be like the ICO market, and they're absolutely just completely different. But we find it interesting because we feel that one day it may get there. It is a matter of time. We recently launched another project called storating.com, which is analysis on security tokens. And albeit there's not a lot out there right now, I think there's a lot of issues around people raising money. There's a lot of issues around the lack of secondary markets and liquidity. So all those are really impeding the growth of security tokens. As for our views over sort of the next 12 months or so, or 2020, I'd say. Our focus right now is more so looking at liquid cryptocurrencies. While ICOs, we're not expecting ICOs to have a comeback, anything like what we saw in 2017. I think the IEO market is quite interesting. However, we believe that it could get burnt out very quickly. I think IEOs, the whole concept of them is that they are controlled and vetted by exchanges. The fact is although we know Binance and Bittrex and Bitfinex, etc., these guys doing IEOs, there's actually a lot more of them being done, over in Asia and in Korea, for example. There's
Definitely.
up to like 20 or 30 a week. And a lot of those aren't raising the capital that any of these others are. Remember, Binance is only raising $2 to $3 million in each IEO. It's not like the 2017 days of $30 million per project. So,
right.
We don't believe that is going to last forever, albeit, some of the projects that they are listing have a lot of potential as well. So, for 2020, it's hard. It's really hard to say, because right now we don't know what the theme is going to be. I think that the ecosystem in terms of existing altcoins will likely be a lot smaller. I think there is going to be a bigger graveyard by next year, but I think the ones that can stick around are going to prosper really well.
Right. Definitely. I agree with that sentiment completely. I always get IEO requests from smaller exchanges, but I think you're right. The ones done by those larger exchanges tend to be a little bit more conservative. Also agree with your sentiments about the STO market. It's going to get built out. It can't not get built out with all the institutional developments, from Goldman to Fidelity on the finance side to things on the insurance side like Lloyd's of London. It will take time. Like even T0, the secondary exchange, it seems to be very early days for them. And while early days, the STOs that are starting to come out are very interesting. So I heard of one recently. There was a closed-end VC fund that was sold as a token in Europe, partnered with an exchange called Blocktrade, which is going for its MiFID II license, and it's looking to be a licensed European exchange. So definitely see alternative assets and high finance finding value in this space, as they're known as a high alpha group, but also as an illiquid group. So things like VCs, PEs, maybe not hedge funds as much, but certainly VCs and PEs have high alpha and high liquidity as well. So STOs would really add a lot of value there. So overall, I agree with your sentiment, and just want to say this has been fantastic, Matt. I really appreciate your time. I think you're doing a lot of value-add research at Picolo, and would love to share with listeners how they can stay in touch with you, what you're doing in different venues, and maybe we'll do a follow-up interview very shortly. Thanks so much, and really appreciate your time.
Sure. Look, feel free, visit our webpage, www.astronaut.capital. Also, picoloresearch.com is our research house. Our new STO rating site is storating.com. And follow us on Twitter at Astronaut Cap, at Picolo Research, and at MJDibb, DIBB.
Wonderful. Thanks so much. Well, you've earned yourself at least one more follower, and hopefully a few hundred more at least when this goes live. So thanks so much, Matt. And it's really been a pleasure. Appreciate it.
Thanks very much for having me.